Hi, I'm Dana Weeks, and I'm here today with Robert Kelley, Elliott Wave International's editor of U.S. Stocks Intraday Pro Service. Welcome back, Robert.
Hi, Dana. Thank you so much.
Today, I want to focus on finding opportunities. And if, for example, you believe a potential third wave is on the horizon, is the wave pattern likely to be similar in all of the intraday indices, or can one market move aggressively on its own?
Obviously, you can have situations where one index is kind of an outlier. Those tend to be harder situations to trade. The higher confidence setups come when you have all the indexes generally doing about the same thing, because that indicates a solid, strong underlying trend in the market and one that is likely to continue. So if you do happen to catch the right side of a move, it's more likely to be sustained than if you have a couple indexes making new short-term highs, a few others not. It's a much harder trading environment. So ideally, you look for the higher confidence situations where all indexes have very similar patterns, I would say.
Sticking with the third wave idea, what are the ideal setups in terms of momentum and sentiment?
Well, I would say, like if you're going to look for a third wave advance, let's just say, you had a nice rally off a bottom for a wave one, and then you get a modest pullback and momentum and an hourly stochastic, let's say, work off an overbought condition, become oversold with like minimal price damage, and then you see a trend starting to turn up. That's a good sign a third wave is likely getting started. Also, if you have some high put call ratios in the case of also again a pullback where you see sentiment showing a lot of fear and skepticism, and the market starts to turn up, and also when you see a gap in many cases, that's a good sign that a third wave is maybe just getting started, or at least has a lot more to go.
Moving over to ETFs, do they tend to move together, or alternatively, are there a few that generally trend in the same direction?
Well, again, kind of like with the indexes, sometimes they do move in the same direction by and large, and other times they really go their own way. So I would say that in terms of ETFs that tend to go together, I've noticed that like the tech ETFs, biotech, healthcare, those can tend to go in the same direction by and large. But really, you can have different sectors doing different things, and that's kind of the beauty of looking at the sectors. When you see the ETFs going in different directions, it really indicates sort of a disjointed market, and one that may be in a corrective pattern, a choppy sideways thing in the S&P, where you have some sectors going up, some going down, some going sideways. But when you do see them all generally going in the same direction, again, that's kind of an indication of a market that has an overall market that has a sustainable move ahead of itself, most likely.
Valuable tips for any newcomers. Thank you, Robert.
All right. Thanks, Anna. Good talking to you.